Hi there, this is Catherine Tyndall. I'm very excited to be doing this presentation for you today. I've been waiting about a whole month for the announcement of this program from the IRS. So we're going to be talking about the IRS ERC withdrawal process that was announced today, and practical considerations for tax professionals. So this presentation is really designed for my fellow tax professionals here. So let's just get right into it. So my course video objective today is we're going to talk about this IRS withdrawal program. We're going to talk about the practical considerations for tax professionals. That's mostly how I'm orienting this. How do you deal with this program? And then we're going to give you some further resources for ERC guidance in general and education. And like I said, this is for this is assuming you're a tax professional who already understands the basics of the ERC program. I'll breeze through it real quick. And you're correcting a claim or seeking to correct a claim, or you've just got a weird client situation with one of these ERC claims that you don't know how to tackle. So that's who this is geared towards. Now, I'm Catherine Tyndall. I'm a CPA at Dominion Enterprise Services. We are a licensed CPA firm with a specialty in corporate income tax planning and niche issues like the ERC. We do a lot of these for other tax professionals. I've had over 10,000 people attend my continuing education webinars. And if you'd like to get continuing education credit for watching these kinds of videos, I am on CPA Academy, which will be linked below, and then I'm soon to be on Earmark. So I'm hoping that we'll be able to get these provided on Earmark so that you can get some continuing ed for this time as well. So I'm just going to breeze through the basics of the ERC program, assuming you already know about it. ERC is a federal payroll tax credit program. It behaves within the tax code, and that's why it's such a mess. It's filed with payroll tax returns. So that's really the filing space that we're dealing with. It's refundable, and it comes back in the form of checks in the mail, which adds to the administrative annoyance with these. The total cap is $26,000 per employee. That's extremely misleading. If you see a client claim that has that, it's probably not right, because most of the time people do not qualify for nearly that much. And where it comes from is $5,000 in 2020 per employee and $7,000 per quarter in the first 3 quarters of 21 per employee. Now, you notice I said the first 3 quarters. So if you see a client who's been existing pre-pandemic with a 4th quarter claim of 21, also a huge red flag. So because that part of the program was closed for them. So the program windows, it started March 13th, 2020, and it goes through September 30th, 2021. That's the overall window of the program. Now, the big core issue is, when is the organization that you're looking at actually eligible, which is completely different than the overall program window. And basically, we're on the filing side of this, these are coming from tax years 20 and 21, but because it's filed with amended payroll tax returns, you actually have until April 15th, 2024 to get the 2020 claims in, and then you have until 2025 for the 2021 claims. So we're getting kind of close to the 2020 deadline this coming April, but that's the amount of time we have to get these 2020 claims corrected, especially if you have underclaimed quarters. That's the correction. Obviously, if you have an overclaimed quarter, you just need to correct that, even if you're watching this video 2 years from now. Companies that started after February of 2020 can qualify into Q4 21 as recovery startup businesses. I'm not going to talk about that, but typically nobody else does. And then nonprofit organizations can also qualify under similar rules as the for-profit organizations. And they typically tend to be more underserved in this space just because they don't usually have to have very close relationships with their tax professionals. They're used to kind of behaving independently because they only file 990s once a year. So you got to watch out for your nonprofit organizations if you're a tax professional. Now, I'm going to just go straight into an example because I feel like that's a good frame for us to be able to talk about this. And then I'll come back to this example after I walk through all the steps and the practical implications. But this is just to get you kind of in the headspace of what this looks like. So example, the first is a client filed with a mill for an obviously bogus ERC claim under the supply chain qualifications, which I'll talk about that a little later, for all 6 quarters of the credit for a total of $400,000. The client has yet to receive any funds. That's what they come to you with. You see a P&L with a weird receivable on there, or they ask you about it. That's the current status of it. Now, the next piece is that we recalculate the correct credit based on actual eligibility. So the client actually qualifies for a small window in 2020. So maybe it's 2 months, maybe it's 4 months under government restrictions. And then they qualify for 1 quarter. This is just an example, 1 quarter in 21 under the revenue decline rules. This is a typical situation because Most of the restrictions that people can qualify for tend to be early 2020. And then most of the revenue qualifications happen in 2021 just because the rules became easier. So overall, they're actually eligible for 100,000. And so because this mill claimed 400,000, you have a $300,000 overstatement. And this is not crazy figures from things that I've been seeing. And then we also assume within here that all of the mill filings have been misstated. So even for the quarters that were filed for, that the client was eligible for, that the mill incorrectly filed those quarters as well and overstated those actually eligible quarters. And then so the next piece is, in this situation, you'd exercise that withdrawal option for the mill filing. And then after you've confirmed that is the true status of the taxpayer's account, that they have all these unprocessed claims. And then after that, filing new 941Xs for the corrected filings. So that would be, Q1 of 20, if it was only that, couple, maybe Q1, Q2 of 20, if they've got a couple months under the government restriction. And then Q1 of 21 was the example for the correct filings following the normal procedure. So that's just kind of like an overall example of what this situation kind of looks like. And then in addition to that, you need to consider if, typically I'm thinking most people where you're finding this video is you haven't gone through the amended income tax return process yet. But for people who have gone through the amended income tax process, you'll want to consider getting that cleaned up right away, just because if you are increasing the wage deduction because it was overstated in the initial amendment, likely it's going to issue a taxpayer refund. And so you want to get that in to get them their refund as soon as you can. And then the last piece is, and we'll talk about this a little more too, is now you have to consider some kind of civil action, right? Because this client probably paid high contingency fees. If the claim hasn't been processed yet, it's likely that maybe they haven't paid anything. And so it's not a problem. But you will want to talk to the client about considering the civil implications with this as well. If they signed contracts, if there were payments made to this other company, what are their legal liabilities? What are their obligations? What's available for them. And that's, obviously outside the scope of a tax filing, but it's something that you need to discuss with them for them to consider how to deal with that. And then also the IRS process for abusive tax schemes. I'll talk about that a little more in the back end too. So the first is, let's just talk about the basics of how you approach the withdrawal program with kind of that example in mind. So the first piece is we need to determine which quarters have been impacted. So we need to determine what happened. The second step is that you need to recalculate eligibility for the impacted quarters, ideally for the whole window of the program if this client never went through an eligibility assessment. And that's the what should have happened, right? What are they actually eligible for, if anything? What should have happened? And then the last piece is once you have what happened and then what should have happened, it's what do we do now? Which is determining if the quarter can simply be withdrawn. Do we need to amend it? How do we tackle it now that we know what the correct state of this quarter should have been? And then within this withdrawal program, withdrawn quarters will be treated as if they were never filed. And that's the direct quote from the IRS. I like that. So no interest and penalties will be imposed by the IRS afterwards. Now, they did have a little caveat that if it's a willfully filed fraudulent claim, withdrawing the claim does not exempt you from potential criminal proceedings. So be warned, this is not just a carte blanche forgiveness if, they suspect that there was fraud involved. But I'm guessing for most of your clients, it's more a negligence, ignorance situation than willful fraud, but do know that. So the first piece is the what happened. I would say the first piece is get whatever was filed from the other provider to know what they had for the filings. But honestly, I would just go through the process of running a taxpayer transcript to find out exactly what's on file with the IRS, because I don't trust another practitioner to give me when it's a mill, I don't trust them to give me the truth of the situation. And then also, who knows, maybe they mailed it to the wrong address and it's never processed. Maybe the IRS never got it and it's never in the queue. So you just want a true, statement of accounts from the IRS. And then how you're going to do that is you can go through and get a power of attorney and then use the transcript delivery system to get a copy of their transcript if you have time, or if you need to go through this process a lot faster, You can call the IRS practitioner priority hotline. And if you have a power of attorney either on file for the client already, which authorizes you to talk about payroll tax returns, a lot of CPAs only have authorization for income tax return, or tax professionals only have authorization for income tax returns. You want to make sure that you have the payroll tax return authorization on there as well. And you can call in and talk to them about the account, and they can look up the status of each quarter for you. And it'll give you the same information as what's on the transcript system, but it's just a lot faster. You're not having to wait for the uploads, et cetera. As long as you don't, if you like the IRS hold music. Now, the phone number for the practitioner priority hotline is up there. You can also find it on irs.gov. Just note the wait times are pretty long unless you use a hold service. And if you don't have that POA, you can also have the client come on the phone with you with the IRS agent and give you authorization over the phone with the agent. Now, they will walk the client through an authorization process that you're not allowed to talk through, or they ask them questions like what kind of organization is, how to file your tax returns, what's your relationship to the organization, just general questions to identify them. And then you can do it that way if you need to get through quickly. But you really want to start with just getting a true picture of what's going on in this account, of what happened. And then they'll be able to tell you if they've processed checks, what the check amounts were, et cetera. So you just want to know all of that. And then if the client already got checks, you want to have copies of get copies of the checks, et cetera, figure out what happened. And, I think that the other consideration here on now, once you know what happened and we go into the what should have happened, I hear a lot of people saying, oh, we feel that we don't qualify for this, so we're just going to withdraw we just want to withdraw our claim. We just want to undo all of this. And I hear a lot of people say the word feel. And I think the next place that you need to go from there, once you know the actual status of the account with the IRS, is go through obviously it's one thing if the taxpayer, the client just does not want to participate in this program, period, that they're not comfortable with it. They don't want to do it, whatever it is, then just unwind the whole thing, obviously. But if they are actually eligible for it, you should get that answer for them, because if they are actually eligible for some of the program, which a lot of people are, you've got a lot of organizations that just aren't eligible for anything, and it just needs to be unwound. But you have a lot of people where they actually are eligible for maybe a small time period in 20, maybe a quarter in 21. You just don't know until you take them through that eligibility process, of looking at those quarterly revenue declines and then looking at the non-revenue qualification to figure out what should have happened. And that's out of the scope of this one. And I'll talk about, maybe more resources with figuring out actual eligibility. But that's really the next piece is, what should have happened here? Are they really not eligible for anything? Yes or no? And so basically what the withdrawal program involves is you getting a clean slate. So if the claim hasn't been processed yet, so when you call in or you run the transcript and you can see that there's no refunds on there for the ERC, and you can also the other thing too I should mention is, don't just assume because the client didn't get the checks that it's not been processed, because the IRS, if the client had a back tax balance, they could have applied. They do this. They'll apply that ERC credit towards the back tax balance for the organization. So don't just assume because they didn't get checks that it didn't process. You need to actually call the IRS or get into the systems and figure out what's actually on the account. And so what the withdrawal process will do is it'll bring you back to that clean slate for that quarter. When you have a quarter where the status, and you call in and they say, we have it scanned in, it's marked as unprocessed, that's it, or we have it processed, we've issued the check, and then client still has that check in hand and has not deposited it. You can use this program for that. Or it has been processed, but it's in examination and checks have not been issued yet. And if it's in examination, you can also use this process. Now, the IRS recommends that if you're simply correcting a return and you're not withdrawing the full quarter, so let's say the filing originally was for 100,000, but didn't take into account PPP exclusion, and actually the client's only eligible for 50,000. They say, oh, we'll file another amendment, and don't file an amended return into the fax line. Now, for a practical consideration, this is something where I guess I disagree with the IRS and how I would handle this, because I want to get that return back to the clean slate first, because I have more confidence in their ability to process that fax and wipe the unprocessed return than for me to just submit an additional. So we have one return in the queue already. And now I'm going to submit another return in the queue and then hope that the timing or just how things are notated on the account will make it so that my client's first claim doesn't get processed. And then with this one, like we're having to pay back some, but not all. So should that client deposit those checks? But it just creates a big administrative mess, right? In my opinion, it's much cleaner to say, okay, I want to knock this first one out. So now we're clean. And now I'm going to file the right one of what it should be. And then it'll process and the correct check amount will come out. That's how I want to do it. So that's what I would recommend you consider. You know, they say, oh, file an amendment. In my professional opinion, I would just clean the slate and start over, because I don't want them sending any checks anywhere, especially if you had a claim that a client did and you can see that the other company's trying to escrow that refund and have that refund issued to them instead of to your client. Not good. Circular 230 violation too. But that's what I would recommend you do. And then from there, you got to look at each quarterly filing and withdraw them individually. Because like I said, these are filed on amended payroll tax returns. Most people are 941X filers. You want to make sure that you're catching each of the quarters that are impacted and getting those ones withdrawn if that's the appropriate move. Now, like I said, it's only going to work for ones where the claim has not been processed yet, or the claim's in examination, or the claim has been processed, but the client has not deposited the checks. And if the funds are already deposited, you're going to have to go to the FAQ where I'll tell you, all they really say is you need to file new 941Xs and true up your account with us. Which great. That gives us a lot of feedback. But you need to go through the normal amendment process. If you cannot use this withdrawal option if they've already deposited that money. So how do you actually withdraw the claim? So you've determined the first thing, which is, okay, I've got a bad claim on my hands. They weren't eligible for these quarters. Say they weren't eligible for anything, or they just don't want to do the program anymore, which is fair enough. I need to wipe out 6 quarters here. Where do I start? So the first thing is, and they haven't been paid yet. First thing is, and we determine that that's the status on the account. The first thing is you go to this website from the IRS. This is the official portal that they have with the instructions for this. Now, because this was uploaded today, they may make changes to this as time goes on. So that's why I recommend, instead of me breaking that all down for you in the presentation, go to this link to the IRS website and actually follow it step by step. It's very simple little process tree. And the basic process of submitting a withdrawal is you get a copy of the bad claim of the 941X that was incorrectly filed. And then you basically handwrite on it, withdrawn, and the taxpayer signs it with their name and title and date. Very official. Can you fax us a note? Anyway, so it took them a month to tell us this. But anyway, so that's how you submit it back to them. But follow the directions and read those directions closely, how they want it, and make sure you're keeping copies of everything, because they might be updating the fax number in a couple days. Who knows what they're going to do? So you just use their guidance directly. And then here's the example they have of the how to withdraw this, which is you take the bad 941X. Now, if you don't have a copy of that 941X, I don't know how you're supposed to handle that. I think what I would recommend you do is just take a sample 941X, fill it out with the taxpayer's information, get this quarterly on the top right here, this quarterly information correct for which quarter you're dealing with, and then underlying that, just write a letter that says, we do not have a copy of the original 941X filing submitted by so-and-so. This was the date range. This was the approximate amount, and then have the taxpayer sign it, etc. And then follow the same process of the withdrawn and then the name and the date, etc. Because I think on their system side, my impression is that when they get these faxes in, they're just going to go through and then delete the unprocessed, unscanned ones in their system. I think that's how they're handling these. So if you don't have the original 941X that was filed, I would attempt to do that first and then see if you can get it done that way. But this is straight from the IRS, this picture here. A very sophisticated process. I applaud the simplicity of it though. And so let's go back into our example again. So now that we kind of have the headspace for all of this, the first was we want to determine what the status of the claim is, right? You want to call, you want to get a transcript, you want to figure out where are all of these quarters. Maybe some are processed, some are not. So maybe we can withdraw the ones that aren't, and then the ones that are going to be more messy. So in this example, somebody filed for 6 quarters, bogus credits, just not eligible for any of it under supply chain, but they did qualify when you redid the assessment for a small window for government restrictions and then another quarter under revenue declines, common scenario. And so you got a $300,000 overclaim for this person. And so basically you need to go back and amend all, you wanted to withdraw, in my opinion, all 6 of those quarters that were filed. And then you're going to resubmit for the 2 or 3 quarters that they actually are eligible for. And then you start from that clean slate. And then, like I said at the beginning, if you've got an amended return already in play, now typically if you're finding this, the amended return has not happened because the mill probably didn't even tell your taxpayer, your client, that they needed to do an amended return. But just consider the amended returns, and then especially consider if there was a 2020 claim that was already done. You're running up against the statute of limitations for those amended returns. So you want to get those in as soon as possible if it's going to trigger a refund. And then the last piece is the civil action. Now, if your client was basically scammed and it was, you feel that it was an abusive tax position and they were, it was a promoter, et cetera, you can click this link, which this will be in the, the slides that you get a copy of for how the IRS wants to be informed of that, especially if you have somebody where it was a phantom preparer who didn't sign the returns. It's really hard for the IRS to track those people. So you just want to try to collaborate, as a profession. I think we should try to collaborate with them as much as possible to get this mess cleaned up. And the more they can be tipped off to, who are the people that were doing these bad claims, it's just going to make the process, make the cleanup a lot better if we can all collaborate. Now, after you withdraw a claim, what happens next? So the IRS says they will send a letter if the withdrawal request is accepted or rejected. Now, my experience with the notice system with them has been very hit or miss. So I would recommend calling 6 weeks after your initial submittal. That tends to be their normal processing time for some things. Now, maybe it might be longer than that, but I would definitely, if you don't get a letter very quickly after the fax process, then you need to follow up with them and make sure that this is actually going somewhere. Keep copies of all confirmations of what you did and the fax confirmations. And then if you did mail them, make sure that you send those returns in certified, send that in certified and keep copies of everything, because you just need proof of what happened in case this gets messed up. I think it's going to be, with any of these processes with the IRS recently, it's just been very messy on the practitioner side. So just assume you're walking into a mess and don't, make sure you've got copies of everything. And then you'll want to consider what quarters need to be refiled, for corrected credit amounts. You're going to want to go back through, start from scratch, go back through the full eligibility assessment. And then, all the substantiating documentation that should be needed, just start from scratch if they actually are eligible. Obviously, if they're not eligible and you've done that, then you're all done at this point. And then you need to consider those amended income tax returns that may need to be adjusted as well. And then, especially like I said, if you've got a 2020 filing where there's now a refund being triggered because you've decreased that lost wage deduction because of that bad claim, they could be getting an income tax refund when you go to fix those amended returns. So you want to watch out for that as well and get those in as soon as possible. Now, if you're a nerd like I am and you want more of the direct guidance from the IRS, this is a summary page with all of these links. If you sign up for there's a little opt-in in the description below for me to send you all the tools and these the slides so that you have all these links. These are all the links to the IRS guidance. Now, if you are interested in the eligibility piece specifically, you're going to want to look at IRS Notice 2021-20. That's the most substantial and it gives the most examples there. You also have the general on the very bottom. These aren't These are more just helper things rather than the actual legally binding things. But you've got the IRS ERC page. They've got an FAQ page. They have an eligibility checklist and eligibility chart. I don't find those to be particularly useful, honestly. If you want to watch, we have another presentation that's ERC Essentials for CFOs. I go much deeper into the details of how eligibility works and how you determine that. So that's probably a better place for you to look. In my opinion, I find that the checklists are not that helpful if you don't actually understand this program very well. Now, if you had a client that's applying under supply chain, I'll just tell you up front, 99% chance that it's nonsense. You want to look at the IRS memorandum glam there, that second to last one. And then that, they spell out pretty obviously that it's near impossible to qualify under supply chain. I don't even know why they made it a provision in the program. But if your client's saying they qualified under supply chain, extremely suspicious. And then the last piece is if you want, it's already further up in the slides, but that IRS guidance on the withdrawal program, if you're going to go through this process, reference that as of the day that you're working on it, because I'm guessing this is going to be a moving target. They just announced it today. Administratively, this program's always been a mess, and I expect it to continue to be a mess. So you'll want to just always make sure that you're dealing with the most current guidance. Now, the last piece here is, the big elephant that I didn't really talk about is, what if you're not comfortable with determining eligibility for a client? You don't do a lot of this kind of work. Now, if you sign up below, I'll send you the tools that we recommend people just start with of, revenue, how to initially approach the revenue testing, how to initially approach the government orders, and then also the links to the, I think for you, probably the CFO Essentials course, if you're not a seasoned tax practitioner in this, is a good place to start, because I cover it in kind of very high level terms that are going to be understandable, specifically around eligibility questions. And then obviously, if you're looking for more specific tax guidance or an engagement, if you'd like a complimentary assessment, these links will also be in the description, as well as they're embedded in these slides that you'll get. But you can reach out below to have a complimentary assessment where we'll look at the specific organization situation and give you some feedback. And then if you're a tax professional that you just need general support with clients with this program, or you've realized that you've all of a sudden got a bunch of these people that need to have this work done, you can reach out to us with that separate link, and we can get in touch to discuss with you how we work for, we're tax pros that work for other tax pros. So that is the ERC withdrawal program in a nutshell. Thanks for hanging on. And if you sign up below to get the tools, I don't spam people's inboxes because I hate when companies do that to me. I'll send you the tools, and then we'll send you updates as we actually get news updates that I think are worthy of updating you about. And then feel welcome to reach out if there's anything we can help you with. Thanks for joining. And also, one last piece should mention, if you're looking to get continuing education for staying up with these updates, you can see our listings in CPA Academy. And then also we'll be in the next couple of weeks, we're going to be on earmarked CPA CPE, so that you can get it through that as well. So thanks again for joining, and feel welcome to subscribe if you're interested in getting more ERC updates. Have a good day.